The Cellular Tower in the Stars, a comprehensive guide to AST SpaceMobile, ASTS. As of January 19, 2026, AST SpaceMobile, ticker ASTS, has transitioned from a high-stakes scientific experiment to a functional aerospace utility. The company is currently building the world's first and only space-based cellular broadband network designed to be accessible directly by everyday, unmodified smartphones. As an investor in early 2026, ASTS represents a moonshot that has finally reached orbit. Having successfully launched its massive Bluebird satellites and secured prime defense status, the company is now at the critical inflection point where its engineering success must translate into a profitable business model. 1. The business model, a wholesale satellite utility. Unlike SpaceX's Starlink, which sells proprietary satellite dishes and subscriptions directly to consumers, AST SpaceMobile operates as a wholesale partner to existing mobile network operators, MNOs. The partnership ecosystem. ASTS does not compete with phone companies, it completes them. Tier 1 backing. In the US, AT&T and Verizon are both strategic investors and commercial partners. Global footprint. With agreements covering over 45 operators and nearly 3 billion subscribers worldwide, including Vodafone, Rakuten, and Bell Canada, ASTS acts as a coverage gap solution. The revenue split. When a user enters a remote area with no cell signal, they receive a text offering satellite broadband for a daily or monthly fee. This revenue is shared between the carrier and ASTS, allowing for zero customer acquisition costs. 2. The 2026 milestone, the Bluebird constellation. The year 2026 is the year of the constellation for ASTS. Following the landmark launch of Bluebird 6, the first of the Block 2 satellites in late 2025, the company has entered a rapid deployment phase. Current capabilities, January 2026. The hardware. The Block 2 Bluebirds are roughly 3 times larger than previous prototypes. Their massive antennas allow them to close the link budget with a standard phone, providing 4G/5G speeds for video calls and web browsing. Service roadmap. In early 2026, the company is delivering intermittent nationwide service in the US and select markets. Continuous coverage. With a target of 45 to 60 satellites in orbit by the end of 2026, ASTS aims to provide continuous broadband across the US, Europe, Japan, and other strategic regions. 3. Strategic catalyst, prime defense validation. On January 16, 2026, the investment narrative for ASTS expanded beyond consumer roaming. The company was named a prime contractor for the U.S. Missile Defense Agency's SHIELD program. The dual-use advantage. National security. This contract validates that the Bluebird satellites can be used for more than just text messages. They are now part of the U.S. Golden Dome security infrastructure. Diversified revenue. Government contracts provide high-margin, stable income that is not dependent on individual consumer spending, effectively de-risking the pre-revenue profile of the company. 4. Financial health. High burn, high valuation. AST SpaceMobile enters 2026 as a financial paradox. It has a multi-billion-dollar valuation despite having very little trailing revenue. Key metrics, as of January 19, 2026. Stock price, approximately $106.02, reflecting a sharp rebound after recent analyst downgrades. Market capitalization, approximately $37 billion. Cash position, the company holds approximately $1.2 billion in cash, which management estimates provides enough runway to complete the 60-satellite constellation. The price-to-sales gap, trading at over 2,000 times trailing sales, the stock is priced for perfect execution through 2028. 5. Critical risks, what to watch for. As with any space tech stock, the risks are literally atmospheric. Launch failures. Each Bluebird is a massive capital asset. A single rocket failure could set the continuous service timeline by 6 months and destroy hundreds of millions in hardware. Dilution risk. While the company has $1.2 billion in cash, the burn rate is nearly $360 million per quarter. If commercial revenue doesn't ramp up by late 2026, the company may need to issue more shares, diluting current investors. Competition. Starlink. SpaceX is aggressively launching its own direct-to-cell satellites. While ASTS holds 3,800-plus patents and has much larger antennas, SpaceX's control over the rockets gives them a significant logistical advantage. Operational hurdles. Building a cell tower in space is incredibly complex. Any software glitch or antenna deployment failure in orbit can render a satellite a total loss. 6. Investment strategy. How to approach ASTS. The cellular supercycle play. Invest in ASTS if you believe that mobile connectivity is becoming a non-negotiable human utility. The long-term horizon. Analysts do not expect GAAP profitability until 2028. This is a 5 to 10-year investment, not a short-term trade. Prepare for volatility. ASTS is a high beta stock. It frequently sees 15% swings in a single day based on launch news or regulatory filings. Dollar cost averaging is often the preferred method for retail entry. Conclusion: the final frontier of mobile. AST SpaceMobile in 2026 has successfully proven that its technology works. It has the backing of the world's largest carriers and the US military. Now, it must move from a satellite manufacturer to a service provider. The verdict: if you are comfortable with the unique risks of the aerospace sector and have a long-term time horizon, ASTS is the primary play for the connected planet. However, the premium valuation means you are paying for tomorrow's success today.